This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. Today we're going to give you an update on the stock market. I'm doing this before the close on Thursday for Friday morning. I'm heading out of town, and so I have to do this just a little bit early today. But what I want to talk about, really, it doesn't really matter in terms of the timing. I'm going to give you a good market update, but I want to cover a couple important things. So let's go ahead and get into the charts here. And what I've done, normally I show you my multi-line time frame chart, like the multi-time frames, where I have one chart, a daily chart, and it has all the different 18s on there. Okay, so what I've done this time is I've got my four charts up, monthly, weekly, daily, and hourly, and I've only got the 18-day up there, okay? In fact, I want to take off because I'm going to show you in a minute. I'm going to go through the momentum. So let's just look at what this is telling us in each time frame. If we look at the 18, we've broken the 18-month, but it's flattening out. Now, typically, not always, but typically when you break a moving average and it's rising, you should look for some kind of a retracement back. We haven't had that yet on the monthly chart. We haven't had a retracement back to the 18. So if this is truly breaking and it's a situation that is truly a rollover pattern, most of the time you get some kind of a check back before it really heads down. If you notice, the last couple times it went through, it just turned right back above without it ever rolling over. Now, this looks more serious to me, but we actually haven't rolled this line over and we haven't checked back to it yet. So that's what this time frame is telling us. Now, if I look at the weekly, first of all, look at the respect that this has had weekly, pulling back to there, pulling back, pulling back, pulling back. Now it's doing the opposite, and we failed at it at the high, and then we didn't quite make it here on this rally. But it does look like it wants to work its way a little bit closer again. It's been a little bit of a while since we've touched that line. That's kind of what I would be saying here. The trend is down. We're coming down towards the low end of this channel again. It just makes sense that we would get some kind of a little rally. Now, I'm going to show you other reasons why I think that makes sense, but we don't have to make our decision on this and say, oh, is this definitely going to rally or not? We can go and look at the smaller time frames to help with this. So if we look at what happened, let's look at the hourly first, because last time we talked about this, I said this went up and it was failing. And I said, if this can hold this area, if it comes down and makes a double bottom this time, that the next time up, it'll get through the 18. Because just realize this moved to the upside on this time frame. All it did was come and hit the 18 on this time frame, which was still declining. But now we're turning around this time. You see how this time you didn't have the 18 on the daily? I mean, we were failing at the 18 on the daily. This time we're getting through the 18 on the daily. And there's a very high likelihood in the next day or two, this is going to start to cup around. Now, if we come here and we hold that and turn up, then you have more confidence that this is the target. This is how you trade in multiple time frames. This is how I want you to think. First off is you could take the trade here for a move up to the 18-day, right? And then we pull back, and then you don't have any room for the 18-day. But if you turn now, we're turning the 18-day. So now we're turning the daily chart potentially. That's assuming that on a pullback it holds. If it does that, then we should be thinking up towards the 18-week. Now, if we get to the 18-week and it fails, that's one thing. But let's say we can push our way through that and it starts to cup around. Well, then our target would be the 18-month. So I thought it would be worthwhile to show you in multiple time frames. And part of the reason is that when you can do it this way, you look at the price structure as well. When I do the multi-timeline chart, we're only looking at price structure in one time frame. Okay, I only have a price and volume on there. On this, I can look at it and see what the 18s are doing, but also what the price structure is in each individual time frame. It's a really effective tool. So something I would recommend, always strip it down. Any indicator you're using, you need to strip down and not look at it with a complex with everything else up there, okay? Just look at it by itself and see what you can learn from it. This one, I mean, if you can't learn looking at an 18 by itself, I think you're not looking hard enough, because there's so much we can gain from looking at this 18 by itself in multiple time frames. All right, let's go ahead and get through. The reason why I don't just put the 18 on there is because of how important the 40 is. First of all, it helps us determine how strong the trend is, working at it as a buddy system with the 18, but also look at how it acts as support. It acts as support. It acts as support. We want to know what the 40 is doing in each time frame. It's also the 200 correlated. If it would be the 200 in the next lower time frame, the 200 period. So as an example, if I'm looking at a daily chart with a 40, that's typically the 200 hour. So just stuff like that, just nice to know. But if we go back and look at what we've been talking about, we're trying to bounce off the 40. We're not really showing any signs of divergence when you look at MACD and you look at ADX. Even DI made a higher high. But look at what we've got. I threw the RSI on here because I wanted to show this. Look at the difference here. On the 5 RSI, we've gotten oversold below 70, actually below 30, way down there, actually pretty low, and we've made divergence. So I think this is telling us that we want to work our way back up towards the 18. That's why I've been kind of thinking that. I think we've made enough of a move, and this is showing that we should get a little bit of a rally. Now, if I look at the RSI, what I would be looking for is for this line, the short-term line, to get back over 50, on a closing basis, a weekly closing basis. All right, and then if that's above and the RSI 20 is below, then we can go and look for a trigger on the daily chart to trigger us in for a new short. Okay, so you want to be keeping this in mind, because if this rally is half-hearted and it doesn't have a lot of strength, it's probably another opportunity to be a seller, either a seller or a short seller. So we want to be watching that, but I think this RSI has given us a little bit of a heads up. As I've said in the past, if I'm going to use one tool for divergence, like if I only wanted to play divergences, then I would probably use RSI. If that's probably the one indicator I would use just for that. I get so much more out of ADX and MACD that I use this as a supplemental tool. My primary tools for momentum gauges are MACD and ADX. So anyway, I thought that was pretty relevant, bringing up the RSI. Now, the other thing I wanted to talk about is what we've got going here is a 2 time frame pinch. We might as well talk about this, because we have undercut this low. We undercut this low, rallied up, and essentially tested. I mean, it got a little bit underneath. I was hoping it would hold 380, but it got below it. But in the process of doing that, the MACD held, right? Now, I've told you in the past, I don't really like doing a pinch play when you're below the moving average. So if I'm going to do that, I have to have confirmation on the lower time frame. So let's go look at the hourly chart. So look at what happened on the hourly. We broke the downtrend line, and then in fact, you could argue that was the trend line right there. Okay, and then it broke it. It kind of did a half-hearted test. You almost could say that this was the 2 and this was the 3 here, right? I mean, you could almost say getting through this little peak right there, just barely, was the 3. The only thing I'll say is that MACD had seriously overrun, and ADX was above the 25 level during this period. So if you notice what happened when we got this rally and then came back and did a real test here, then ADX was below 25. We had low ADX, and we had a much better looking MACD pattern taking place. So I would be more inclined to think that this is really the true two, just based on what MACD and ADX were doing. This was too much overrun to want to play this as a 1, 2, 3. Hopefully you can see that. I mean, this is not, this might have been doing 1, 2, 3, but this is pretty strong, and this is a lot of overrun. Every time I've said overrun, I'm looking for the test. I'm waiting for the test. So either way, we've been waiting for this test. Then maybe coming through here would be aggressive, or you could have waited for that. But then look at what happened. We crossed up, green crossed above, and then we got a pinch play right here. So this is the 2 time frame pinch. We did a pinch play here, and then we got the pinch play here. And I would take that as a trigger, using the low of this bar, the high of this bar as the trigger, as the entry, and the low of the bar as the stop in this situation. That's what I would do, because if this isn't going to work in the bear market we're in and everything, if this trade's not going to work, I want to be out of it right away. I don't want to give it a lot of room. But if it is, I'm going to take advantage of it. The other thing is that let's just look at this on a 30-minute chart. Look at how crystal clear that is as a reversal and a pinch play. So different time frames give you different readings, but this is still a quality setup above the 40, with green DI starting to kick in and the MACD getting through the 0 line. So I just wanted to make sure I covered that. But it's kind of like short term, we're looking for a rally, but it is counter trend. Okay, I mean, this is counter to the main trend. Hope I've given you enough detail to be on what to be on the lookout for on this rally. But that's the update for the week. Go ahead and post any questions or comments. Thanks.